Good evening. This is Ken Long from Tortoise Capital with a trading lesson of the day today for March 4th, 2013. And we're going to take a look at the connection between overnight preparation and the weekend reports, and then translating that into a intraday turbo trade, and show how looking at things through different time frames allows you to get a preference for a particular direction, and then how to use early information in the after the open to start taking a directional position. So on the evening of Sunday, March 3rd, 2013, we took a look at market conditions and saw that the weakness of the previous week had postured the market to be equally likely to go with volatility, either reversion to the highs or a sell-off. So we're expecting a potentially vigorous move in either direction because of the critical state that the market had gotten into. And so we then use that to take a look at some individual stocks and ETFs that were also in critical conditions. And one of our trading favorites is CLF, or Cliffs Natural Resources, which tracks very strongly with XLB, which is the sector spider for materials. And it's a very directional stock. So we're looking at 4 months of daily charts here, and it's organized in the usual way with daily candles. The orange ribbon in the middle is the 2-period Bollinger Band, or the true price, as I think of it. The shaded red area is the area underneath the 200-period moving average, which is, you can just see the edge of that line right here. And you notice the big sell-off in Cliffs Natural Resources from 37 down to the 30s in the middle of February. Now it's sold off as of last Friday, 1st of March, down to 25. So some bad news in the company. The bluish ribbon in the middle, the dark blue, is the 30-period Bollinger Band, plus or minus 1. The outer paler blue is the floodplain at 30-period Bollinger Band, plus or minus 2. The thick blue line here is the 30-period moving average. The red line in the middle is the 50-period moving average. That forms really the Bollinger Band mean of both those Bollinger Bands. ADX up top here, the Williams percent R, which shows that we've been oversold for really almost 15 days. And then percent price oscillator, which is showing that the sell-off has started to lose a little bit of steam, kind of deceptive because of the excessive selling here that's contained all in that single candle. So the more important issue here is we've got about 13 of the last 14 days have been lower closes. And so all of these have really been able to fire at a 5-day down pattern, but we never got the entry signal. And so we really like this position because now this is a critical state in Cliffs Natural Resources. It's either going to fall off the edge of the cliff here because it closed Friday in a doji, and it seems to be holding around 25. And if it does actually put in an intermediate swing low at 25 on oversold conditions, well, then even a return to the Bollinger Band mean is a 30% trade. $8 on 25 would get it back to 33, or even if it just went up to test the gap down at 31, it's still a really good trade for very little risk if we're using 1 day's range as the initial stop. So we would, on the long side, we'd need to see a price above 26, but then a failure, a 5DD failure, would be any prices below 25 and dropping would be an instant short. Now, Cliffs Natural Resources is also in the S&P 500, and if we remarked on the weekend report that Stock Charts has an interesting little filter called the Scooters, SCTR, which is a blended relative strength strategy that combines long-term, mid-term, and short-term indicators in a blended way. And then they rank that all the stocks in the S&P 500 by that. And it turns out that Cliffs Natural Resources is the worst performing stock in relative strength of any of the 500 stocks in the S&P. And personally, I like that because it's from extreme conditions that extreme follow-throughs occur. One thing I would just notice here is that from the last swing low, when Cliffs was down at 28, it went from 28 to 40, so 12 points on 28, almost a 40% move in a period of about a month. And so this can be a really tradable stock, and you'll notice it's very trendy. So the fact that it's down 13 out of the last 14 days, closing in a doji at the extreme limits of the floodplain, and below the swing low, suggests that it might be drastically oversold, particularly with a little bit of hinting of reduction of the downward pressure indicated here by percent price oscillator and the fact that it ended in a doji. You combine that with the market in a potential critical state, and this one is ideally poised to go in either direction. So if it fails below 25, it's going to be a continuation of this horrible selling pressure, which is easy to get into, easy to believe. But if it gets above 26, and if we saw market strength, this might actually be an interesting play for a one-day rebound off the bottom, and maybe get one of these large white candle kinds of days, which can happen after the end of an oversold condition. So Cliffs Natural Resources was one of the setups that we looked at over the weekend. We looked at a dozen other symbols too that were in similar critical states, or were in critical states all of their own reasons. But Cliffs was definitely on our short list to trade because it offers a respectable reward to risk ratio just on a retest of the 10-day high, which you get it back around about 30. And then dividing that by a one-day risk, that makes that a very favorable almost 5-to-1 reward to risk ratio. So we're well prepared now to trade Cliffs Natural Resources. So now when we dial into the daily, this is just a snapshot of that daily to remind us. We're now looking at Cliffs Natural Resources on 3-minute charts. The vertical blue line is where the market opens, and so Cliffs gaps down from 25.20 and opens up at 24.80, so a 40-cent gap down, and then trades sideways for about 30 minutes here in this yellow zone. Looks like a little sideways channel, and you can see the VWAP holding steady. But then right at about 30 minutes in, we start seeing some selling pressure here with lower highs, and then it collapses below 24.60, which is enough for us to get into it at short position at 24.60. It immediately runs down to 24 and then starts to recover, and then you'll notice there's a regression line crossover here around 24, and the ribbon is starting to enter, and that seems like a reasonable place to cash a position. So we're able to cover about a half an hour later at 24.20 and pocket 2R, all for a trade that was set up ready to go in either direction because of that critical state. And then we were able to trade this one later on during the day. Let's find another one. The subsequent one, this was the first trade, so now we're out around lunchtime. And so we got this. This was our first trade, getting short here at 24.60 and then covering at 24.20 as price entered the ribbon. I had other things going on this morning where I was looking at the volatility trade, which will be the subject of a different video. But that caused me not to be available to see this signal here, which was after the regression line crossover, price doesn't even get to the Bollinger Band mean or the VWAP, but starts failing immediately. And so in this blue circle, if I'd been a better trader, this would be an auto reshort here. So covering here and then shorting again, and then there's a possibility of getting short at 24.20 and riding it down around 23.80. So another potential 2R in this intermediate term frame that I missed. At this time, though, we were working a couple other trades, and so our span of control did not allow us to take this signal. But at about 11:50, we noticed there was another regression line crossover. The ribbon enters the river, and then once again doesn't even get to the Bollinger Band mean, but fails. And so, because we were available and had cash available and span of control available, meaning that we had attention to give to this, We get short again at 23.90, and now because it's later in the day and there's less volatility and it's easy to believe in the fail here, and the price was only 10 cents to the Bollinger Band mean, we can use a tighter stop here at 0.1, and then it collapses here below 23.80 as I was making this chart, and the next entry gets hit at 23.75, and we're able to close this about 3 minutes or 5 minutes later at 23.70. It had hit 23.60, started to recover, so we went ahead and cashed that one at 23.60, and that trade looks basically like this. So we get two quick re-entries upon confirmation of the failure, get a second position in, hoping to see it fail big time, but the long tails here, and then the slight up hook in the ribbon, and the 10 period is starting to turn, and it's getting closer towards lunch. We decide to go ahead and cover at 23.70, and that gives us 2.5 hour on this, about a half-hour trade, which was a continuation of the big fail. So we're able to pull about 4.5 hour out of Cliffs Natural Resources, all being attributed to our analysis of the market conditions, that it was in a critical state and ready to support moves in either direction, and then a read of the market direction early, and being able to get this first easy move. Well, none of them are easy, we know that, but getting the first easier move, almost no adverse pressure here, all sell, and that we missed this one in the middle and then picked up the third leg. And on the third leg, I was more than happy to cash another couple R on that one. So that's a quick look at Cliffs Natural Resources. Now, if we look at this on the back on the daily bar, and we advance it one frame, you can see here that at the red line at 25, which was where we were prepared to go short if price showed us failure through 25. We end up getting one of these big red candles down, an easy trade in Cliffs, if any of them are easy, and so that looks like a good day for a frog, or a good day, one day follow through on failure on a 5-day down on a very weak stock. And now we're prepared tomorrow to get short of this thing again if the weakness continues, and we'll just continue to ride that narrative until the truth begins to change. But there could be another leg down on this, because as you see, we had some big selling pressure here, more selling, but then narrowing ranges, and then a couple dojis, and then they paused, got their breath, and said, "Nope, we're going to sell this some more." And so now this could be potentially another big down day, especially if we see some weakness inside the rest of the market or the materials sector. So we'll be prepared for that eventuality. The farther this falls, it's a good company, the easier it is to reframe this on the long side and start treating this as the first half of what might be a cup and handle, in the same way that this one sold off as far as it can go and then couldn't sell off anymore, and then there was a possibility of a return to true value or fair value, all on the way up. And so we'll be prepared to trade this one in both directions in the days and weeks ahead. So it's Ken Long from Tortoise Capital with the trade of the day in Cliffs Natural Resources. Thanks for your kind attention.